Everyone, this is Terence Tan from impossibleinvestors.com. We run training programs for retail investors who are interested to create a portfolio in the US stock markets with US stocks and options. Now, today I'm going to talk about the hottest stock in the markets right now, and of course, there's none other than what we know right now, Tesla. All right, now, so the question now is Tesla had a real breakout move over here over the last week. All right, it's been absolutely crazy. So I'm going to talk about it in this video, why we had that move over here. Why is it so similar to a move from another car manufacturing company a couple of years ago. All right, and if you really like the opportunity, you want to profit from it, what can you do today? Should you buy stocks? All right, or should you trade options? I'm going to talk about all the different kind of ideas and trades that you can look into if you really want to profit from this stock, if you're still trying to get in right now. Okay, now, so let's have a look at the screen. All right, now let's look at what trades you can look into if you're still trying to profit from Tesla right now after the breakout. So this will apply to both my students in my community over here in IMP, as well as those of you who are already option traders out there, or if you're just a simple stock trader, what kind of things and opportunities you can look at in Tesla. All right, now, so moving along, this is what Tesla has done over the last week. This is taken as of yesterday's night's closing in Singapore time over here. So that would be 6th of Feb. Now, so we had the big strong up move where Tesla made $950 before coming to close on an indecision day. The candlestick chartist will tell you this is a doji day, so it signifies indecision in the markets. Before next big down day was happening for about, I think, almost $140 on the announcement that shipment might be delayed on the Tesla 3 models coming out of China. And of course, we had a rebound yesterday, which brought the stock back up again. Now, so if you're looking for opportunities in Tesla, what can you look at, and what are the price points that you could look for entries over here? All right, so based on a technician point of view, you can see that Tesla is on a strong up move. The 20 moving average, the 50 moving average are all above the 200 days moving average. And of course, you see a parabolic move over here in terms of the first breakout, followed by another breakout, all right, a third one over here, and of course the fourth big one that we're seeing right now. There's a lot of strength in MACD over here, but RSI is coming off from a very high oversold levels. Okay, now, so this is one of the first breakout points that we have seen over here, the significant one at about 370 levels, all right, where it broke off strongly, all right, followed by the next clearer one right now, which is sitting at around $600 level, which it clearly broke about 2 weeks ago, all right, and we are very much higher right now. Okay, now, so this was the main driver between Monday's big correction in the stock move and hampered the big surge upwards over here. So it's pretty much the coronavirus is forcing Tesla to delay Model 3 deliveries. So out of all the good that's happening in the stock price, this is a bummer for the investors, and it spooked investors a little bit. So it might cause huge profit takings for people who are already sitting on big profits in the stock where they got in earlier, or it actually brought about some short sellers into the markets again on Tesla. Right now, so let's go back to the stock first. So I can't help but be reminded of similar moves that has happened to Volkswagen stock in the German European market a couple of years back, where short sellers being so short in the stock over here actually led the stock to briefly drive all the way up to $1,000 per share because of short covering. Right now, Tesla may have boiled down due to the same reasons. Many people don't favor the fundamentals behind Tesla, so we may actually have a lot of short sellers in place on Tesla stocks over here. So when the drive and the breakout starts happening, it starts leading to a lot of short covering over here, and that's perhaps maybe one of the reasons why the stock managed to move up so exponentially over here. All right, now. Moving along some of the levels you can watch over here, we have of course the breakout which is bullish in nature, right? But there is also a lack of clear support levels right now, right, due to the multiple gap ups the stock has done. Right now, of course, if you're going to look at longing right now, if you are not already in the stock, that comes with a very high risk. there is of course a potential correction move up to the $600 support level from the last breakout that you've seen. So if you are actually thinking of going long on the stock basis, that might be a much safer entry level to be looking at. You'll probably be looking at a bounce off the support level over there for the uptrend to stay intact. Now next, how should you trade this if you're still bullish? Alright, I will take a look at it in this presentation, and let's move along. So some of the trade ideas, let's talk about the simple generic stocks over here first. Now if you're trading stocks and just stocks alone right now, if you want to go long on Tesla stock, you would really have to pick a good entry point, and like I said earlier, the 600 support level would probably present you the best risk reward opportunity right now if you're trying to get long on Tesla. Right, and that has to be coupled together with a strict cut loss level. You have to determine where your cut loss is, where your maximum pain threshold is. But the capital requirement is going to be pretty substantial over here. For $600 a share, just 100 shares trade on Tesla alone would require a capital requirement of almost $30,000 in deposits. All right, and that's based on margin, where you can borrow 50% on trading stocks over here. Right, so if you're not taking any margin, then you'll be looking at $60,000 as a capital requirement just for 100 shares trade in Tesla. Right, now next, you could set a hypothetical stop loss at $550 level. So that would lead to a $50 loss per share, or a $500 loss on 100 shares trade. But you do have to be aware that this could be wiped out within a day, as you've seen what has happened just 2 days back, where Tesla fell almost $150 before closing the day. All right, now, so there's an uncontrollable risk that is not mentioned as well, because if the stock does do a big gap down again, you could be looking at losses that are $100 and above if the stock gaps $100 lower from yesterday's closing price, all right, which can definitely happen right now. On the downside over here, right, you do have to wait for the right opportunity to present, which means if you want to get long right now on Tesla, it's very risky to do so. The risk can be more controlled if you're willing to sit and wait to see if Tesla comes back towards the $600 support level before getting in on a long trade. Okay, now moving on. Let's go and talk about options over here, because I'm Possible Investors being option traders. These are some of the alternatives that you can look at if you're also trading options in the US stock market. Now, the first one is of course just to substitute the stock trade over here with a simple call option. All right, now, so if you're looking to get in today, all right, you're very bullish about it, you don't want to miss the next opportunity based on the judgments that you have. All right, you could go look at going long on the Tesla 21st February expiry, which is about 14 days or 2 weeks right now, $750 call option. All right, so buying the call option allows you to benefit and profit from the upside. So if the stock continues to move up from $750, which is near the closing price on yesterday, 748, all right, then you'll be looking at profiting from the trade there. Now, the premiums for this call option would sit in at $61.50. As you can see, it's not going to be cheap as well. So on a one contract option trade, which is the smaller size you can trade on over here, it will set you back $6,150 as an investment on this opportunity. Now, you could set a hypothetical cut loss over here at half the premiums that you're paying. So that will still set you back a loss of about $3,050 on a one contract trade over here. Now, so the max loss, however, you'll be looking at is of course the total premiums that you have paid, which is then $6,150, right? If you do not wish to set a cut loss on the premiums that you have paid. Now, so this is how it looks like over here. This is yesterday's closing price, 748.96 on Tesla. All right, and we're looking at the 21st Feb expiry, which is 14 days from now. This presentation, the 750 call options over here on the left hand side, all right, sits now on a last traded price at about $61.50. All right, so if you're going to purchase it tonight, let's say if the market opens and Tesla stays where it is at this price we see right now, you'll be looking at paying around $61.50 for that option that you're looking at. Now, so in terms of profit potential, let's take a look at some examples. So when you buy the 750 call, just imagine that this is a line that you have drawn on the stock right now. So Tesla is sitting just under it right now at 748.92. Right now, if the stock does drop to the $600 level, marked by the black X point that you're seeing, right, then of course the call option is going to expire, and the premium that you have paid buying the call option would be the losses that you're looking at. All right, of course, when it starts going downwards towards that point, you could also decide to close the trade by selling away the call option and taking back whatever premiums that you can get when you sell it off. So the losses would then be the difference between what you paid to buy and what you get back from selling the option when you're closing the trade. Now, let's look at the positive side then. If the stock continues to rally and it goes back up to $900 level, near the high that we have seen it make earlier this week, then the profits that you'll be looking at could be a stock price of $900 minus the $750 call strike option, and you'll be looking at a profit of about $150 a share, all right, or somewhere near to that. Right, so for one option contract over here, you could be looking at a profit of $1,500 from this trade. Okay, now, so assuming that you decide to set a cut loss at half the premiums you have paid over here, so this would present a risk-reward ratio of about 0.1 is to 0.5 over here. So you're risking 1 to make about 0.5 in exchange. Right, so it doesn't sound like a really good opportunity or a trade to be taking, like the stocks trade that we mentioned earlier. Right, just an alternative over here, which is suitable for the current environment in the markets. Markets are bullish again because it's recovered much of the losses, but there's still a lot of risk in place. All right, we have the non-farm payroll coming out tonight, Friday, the first Friday of the month. All right, so it could spook the market again, or if the virus situation starts to escalate, it could bring back another spook in the market as well. All right, let alone ignoring the bond prices move that has been happening, which is putting pressure in the market that I've covered in my previous market updates. You could go and have a look at the videos in my YouTube channel over here. You have missed it. All right, so there are multiple pressure points in the market that could cause it to turn around again. Right, but going on to options again, right, a separate trade idea you could look at over here, it's what we call a limited risk trade, right, which involves buying a call option over here, but right, you'll be doing it as a spread instead. Right, so this will involve buying a call option, right, and then after that selling a further call option at a different strike level. Right, so looking at the same expiry for the 21st of Feb, right, we could look into buying the 750 call, which we have traded just now. All right, but the difference here is we would add a sell 770 call option, all right, to the mix. All right, so this is going to be a combination trade instead of a single option trade over here. Now, the premiums that you end up paying for this particular combination will come in at about $850 over here. That's an estimate based on the bid-ask spread between the two strike prices on the call options. Right, but that would be an investment of about $850 per option contract that you trade. So you can see the capital requirement is significantly much lower right now from the single option trade. Now, you could also still set a hypothetical cut loss level at about half the premiums you have paid. So the losses now could be looking at somewhere around the $425 loss level, which is probably slightly more manageable over here for what we would call a speculative trade. All right, and make much smarter sense over here to get into such a trade. Now, of course, the max loss will be the entire premiums that you have paid for buying into this combination option trade if you do not set any cut loss in place. Right now, the max profit, however, will be the $20 difference between the call strikes that you have done over here, right, less the $850 in premiums that you have paid upfront. Right, so that could be a profit potential of about $11.50 on a single contract over here, or about $1,150. Now, so this is how the trade will look like over here. All right, you will go ahead and buy the 750 call, which was what we did earlier. All right, but we're going to add a sell. All right, 770 call on top of the order that we have placed. All right, so you will end up paying the difference between the two options trades that you're doing. So that would be around $61.50 for the 750 call. All right, and then collecting about $53 in premiums on the 770 call option. So by offsetting it, you arrive at your $850 that you're seeing on the screen over here. Now, So let's take a look at the scenarios. If the stock were to fall back to the $600 level over the next 2 weeks, both the call options will expire and the premiums become zero. All right, so you would have lost the $850 that you had paid. All right, if the stock lands somewhere around 760, which is the middle of the two call options that you have traded, all right, then you would have to try and sell off the 750 call option over here. All right, and the profits you'll be looking at will be 760 minus 750 call strike, which brings about $10 over here. Okay, all right, $10 will be what you get from selling it. So taking away the $850 that you paid upfront, so you'll be looking at $1.50 profits on the option, or about $150. Right, just a small profit over here. Right now, if the stock does go back up towards the $900 level, all right, you could also look at the premiums immediately and try and close the entire combination. Right, you may not get the $20 because that will probably only be achieved on the expiry itself or close to the expiry. Right, but you could be looking at closing the entire combination for maybe a premium of around $19 or so. So that would still bring you about over $1,000 in profit on a one contract trade over here. Okay, just as a contrarian trade idea, right? Because if you do strongly feel that you want to get in long on Tesla only when it starts going towards the $600 price level, right, there is also an opportunity that you can take on over here if you do feel strongly that the stock is going to correct. So you profit from the down move first before you load up on the call spread after it hits the 600 support level. Right, so this is the contrarian play you can look at over here, which is to be an option seller. All right, so instead of buying the call spread combo that we mentioned just before this, all right, you will be a seller of it. All right, so you could sell the 750, 755 call spread for the same expiry of 21st Feb. All right, so this would mean that you're selling the 750 call option, all right, and turning around and buying the 755 call option. Right now, this will give you a premium of about 282 on this call spread trade. All right, so but being a seller, you will collect $282 upfront on a single contract trade, and the capital requirement on this trade as an option trader will be actually be $500. Right, $500 because the max loss on this trade is actually capped at a $5 difference between the two strike prices on the call options. Right now, so the max loss on this trade would actually eventually be $500, which is the maximum loss, less the $282 in premiums that you collected up front. All right, so you're looking at about a loss of $212 on this trade. Now, how about the profit potential? All right, the max profit can be achieved when both call options expire worthless in 14 days time over here, and you will net the premiums that you have collected as a seller, which is going to be $282 up front. Right, so in terms of risk-reward ratio, you'll be looking at risking $1 to make a 1.33 over here. So in terms of all the trades that we looked at so far, right, looks like the risk-reward ratio is pretty decent when it comes to this sell option trade on contrarian trade on Tesla over here, right, if you're interested in it. Now, this is how the trade will be structured. You're going to sell the 750 call, all right, and then turn around and buy the 755 call after that. All right, and the premiums comes in at about 282 over here. Now, so this is how the trade will look like. All right, now you'll be selling the 750 call, so any movement of the stock above the 750 level over here will start resulting in a loss. All right, and above 755 would end up with the max loss situation on the entire trade. All right, so if it goes to 900 over here, all right, the max loss of $218 will be taken on the trade. All right, if it lands somewhere in the middle, all right, your losses will be anywhere that is taken from the stock price less the call options, the sell call option strike that you have done, all right, and adding back the premiums that you have already collected in your pockets over here. All right, now if it goes all the way down to $600 level, that's when your max profit is being made, all right, which is the $282 in premiums that you've collected as a seller up front. Okay, now, so this is what I want to cover, and different trade ideas that you can look into on the hottest stock right now in the market, Tesla. All right, so if you're interested to lock yourself down on a trade, do take note of these different ideas, weigh your pros and cons, and make your own self decision over here before going ahead to trade. All right, and do remember, just as a disclaimer over here, there's always a risk of loss in terms of any trading that you're doing. So be aware of what you're looking at before actually placing any trades live in the markets over here. And of course, know what you're doing before going ahead to do it. Just some trade ideas to feed you on Friday before the week ends over here. Happy trading and happy profiting amidst volatile markets right now. And just signing off over here. If you like the videos and you would like not to miss the next ones that we're going to come up over here with more trade ideas on the hottest stock that I'll be doing up right now. So click on the subscribe button on our YouTube channel over here, or follow us on my Instagram over here or Facebook fan page at the links that we provide in the descriptions following the video itself. And I'll catch you in my next videos over here. Happy weekend and good trading, everyone. See you.